Now comes the capability of the management. So till now we were talking about what is the integrity of the management, right? Whether they are siphoning off money or not, how are they paying their relatives, and what kind of actions they are taking with the auditor and all that. That was showing the integrity of the management. But integrity itself is not enough. A person who is honest but not capable, how can he raise? How can he help me increase my wealth? Not possible, right? So I want someone who is honest, has integrity, plus capable. Both the things are totally different. There are people who are honest but not capable. There are people who are capable but not honest. We saw that in the last few minutes. Capable management but not honest. So they know how to pull out money. So we want both the things. So capital allocation. What is capital allocation? Capital is another word for money. Allocation means how are you allocating the money in different projects so that it gives you the best possible return. How are you investing money in expansion of the company, in buying subsidiaries, or maybe some new projects, whatever you're doing? How are you allocating the capital so that the efficiency is good and you get good ROI, good return on investment? Now, capital allocated to subsidiaries that generate losses. So there are cases where the company is making profit, or let's say the main entity is making losses or profit, but it is getting worse because of the subsidiaries, because the subsidiary of the company is making losses, because of which the net profit is going further below. Let me give you one example. Company called GMR Infrastructure, right? I go to profit and loss. This company is already, let's go to standalone. I clicked on standalone. Look at last 2-3 figures. This company is already in losses. Yeah, minus 1,500 crores, almost minus 1,280, minus 1,031. Right now, if I click on consolidated, it will show me the net profit of other subsidiaries put together. Right. So let's click on this. Now look at this. It has increased. The minus figures have increased. So subsidiaries, the main entity is making losses, but the subsidiaries are also making losses. Now there are cases which, though I could not find that right now, the company which I was quoting earlier, it is now making profits again, losses again. There was a company which was making profit, the main entity, but the subsidiaries were making losses, because of which the net profit for standalone was good. It was positive, but after including the subsidiary profits, it was going negative. So I told you in session number 3, always look at consolidated data. But at the same time, also click on standalone and just see if how much difference is there. Just see if the subsidiary is pushing the company up, or is it pulling the company down. Yeah. So there are cases when the subsidiaries are cash, they're just eating away cash. The main entity is making money, subsidiary is supposed to expand, so they are just expanding and burning money right now, because of which the main entity and the entire company as a whole is making losses or making very, very, very small profit. I again want to stay away from such companies. Yeah. Next, main line of business is the GMR is a perfect example. Anyway, I will not invest in such companies. So just stay away from companies which is main line of business is generating losses, but because of subsidiary, it might be in profit. Again, I don't want to invest in such company. I want the main line also to generate profit. Yeah, subsidiary की वजह से थोड़ा सा push up मिल गया, that's fine, that's a good news. But the main business should also make money. Yeah, unrelated businesses, a company getting into various other industries, again, it's a big no for me. Now there's a one exception to this, which is Reliance Industry, and which is incidentally the biggest company of India. It is in all the unrelated businesses, still it is doing well. It is an exception for sure. Apart from that, let's look at the top companies of the country. So I go to screener, I create a new screen. Let me say market cap more than say 75,000 crores. Run a query. Arrange through market cap. Now look at this. Reliance, as I said, is an exception. Look at TCS, one industry, IT. HDFC Bank, one industry. Infosys, one industry. Hindustan Lever, FMCG, one industry. ICICI Bank, one industry. SDFC Limited, you might say they are different industries. No, it's the same BFSI sector. They own SDFC Life also, SDFC AMC also, SDFC Ergo also, insurance business, mutual fund business, banking business, but it's the same industry. It's a synergy. So it's the same industry. I'm saying SDFC starts a steel company tomorrow. That's unrelated business. They start a telecom business tomorrow. That's an unrelated business, right? SBI, one company. Bajaj Finance, one industry. Kotak, one industry. Bharti Airtel, one industry. Wipro. So you look at the biggest companies of the world. Most of them, be it Google or Facebook, they are in one industry. 99.99% of the time, if you focus on one industry, the chances that you will do well is very high, right? That's one part. Let me look at the other part of the coin from the investor point of view. Let's say I'm doing research on Reliance, right? Reliance has got 4 or 5 different industries. Now, if I really want to do thorough research on Reliance, my effort will be 5 times compared to any other company, because I have to research about 5 different entities and businesses of Reliance and compare with competition and look at the industry and everything for all those 5 companies. Now, will Reliance give me 5 times more returns? If I'm making 15% returns in my normal single industry stock, will Reliance give me 15 into 5, 75% returns? No. Then what's the incentive I have to put in 5 times more effort to get similar returns? Or maybe not even that. So I personally prefer to stay away from companies which are like conglomerates with unrelated businesses, because my effort to do the thorough research on that company increases manyfold, but it does not give me the corresponding returns as such. It will not give me 3, 4, 5 times more income. No. Rather, I'll focus on one industry, invest in that stock. If I want to invest in telecom, I'll invest in a pure telecom stock. If I want to invest in retail, I'll invest in a pure retail stock, and I'll be able to do my research in a more systematic. Yep. Next one, delay in project execution. Again, look at the MD and A section. I gave you one assignment also after session number 3 or 4, where you have to read the MD and A section of iShare, right? So MD and A section of annual report, like 3, 4, 5, sometimes 10 pages long, not more than that. It will give you the entire, what is going on in the company. There's a delay in the project. They announced something 3 years back. It was supposed to be over in 2 or 3 years, but now it is delayed. Now, if it is happening once in a while, it's fine. But when you're reading about the company and every now and then, every project they're delaying, it shows they're over promising. Every time they will come and announce that, we will complete this project worth 200 crores in next 1 year, in next 2 years, or this project worth 500 crores in next 3 years. And every time they delay it. So that shows either their efficiency is not there, or they're just over promising, and under delivering. Yeah. Cost overruns. Again, the company says we are expanding the company. We are, opening a new unit worth 200 crores. But at the end of like 2 or 3 years, when the project is done, the cost comes out to be 300 crores. Yeah. Again, if it happens once in a while, it's fine. But in every expansion, this is happening. Again, either their efficiency is not good. They plan something and they're not able to execute, or they are again over promising. They knew at the back of their mind the cost will be 300 crores, but just to come in the limelight, just to give good news to the investors and shareholders, they quoted a lower figure. Everything is there in MD and A section. Yeah. Canceling projects. So they announce a project that we are opening a new factory. They buy a land also, and then they cancel the project. So the land which they bought for, let's say 50 crore rupees, that goes waste. That money is stuck there. Right. So again, every now and then, if they're canceling projects, making big announcements, the share price is shooting up as soon as the announcement comes. And then later on, after a few months, they very quietly just write a small line in the annual report: we have canceled this project. Now they will not come out and announce. Another red signal for me. Company expelled from the projects. So there can be company cases where company has got some project from the government or maybe some other private company, and they were expelled from the project because of whatever the issues were, personal issues or maybe some technical issues or whatever the reason is. Again, if it is happening every now and then, it's a big problem for sure. Stay away. Yeah. So all these things, again, they are subjective. You have to dig in a bit in terms of reading a few pages. But as I said, you don't have to do this for hundreds of companies. You have to do this only for a very small number of companies. You will get to know this by session number 9. Last, you will get to know when we look at portfolio management, right? So don't worry about that. just understand the beauty of how you can dig out stuff and what all you should look for when you're reading something. What you should look for, that's what is important. Yeah, so that you can save your time, and in a very efficient way you can analyze a company. Yep.